welcome, guys. Just going to check in and see how the markets have been on the last trading day of the week. The big data event on Friday was the US non-farm payrolls, which we got quite a strong number. The survey we saw here was 185,000, and we actually got a pretty strong uptick to the upside there at 253,000. So, look, it depends which way you want to look at it. It's a sign that the American economy is, well, the labour market especially, is still strong, and perhaps the underlying economy, in the light of other data points showing otherwise. But then you can make a case that this is really not cracked up as it should be, as look, it's still a sign of the underlying inflation issues and labour market tightness is still going to lead to a need to continue raising rates. So yeah, look, the market sort of took this as a two-way perspective. It was a nod to economic strength and resilience. However, there was underlying fear that this persistent strength in the labour market is going to continue to see inflation be stubborn. So yeah, look, as we look around FX markets, bit of a mixed bag. We can see the euro here didn't really do a lot on Friday. Look at the chart for the euro. It was sort of, this is when the number came out, fell away quite a bit on dollar strength, but then did regain quite strongly and finished the day basically unchanged. CAD is an interesting one. We saw fall off a bit, which is mainly to do with some commodity exposure as well as the Aussie dollar. But we saw, yeah, CAD did weaken quite a lot on the drop of that news. Yeah, and it didn't really recover, so it was down about 1.2% on the day. Now we look across to bond markets. So we saw the US bonds weaken. We saw yield jump there. You can see on the chart there's a quick spike in yield after that number was announced. Obviously due to the need to perhaps continue or hold rates higher than the cut that's being priced in as early as July, which has now dissipated somewhat. And yeah, these moves were mirrored mostly across Europe. We can see here in the Asian Pacific region, the market was actually shut for the weekend before that before that data was announced. So we'll see yields pop up. We'll see those yields pop up on the open for Monday. So looking across to commodity prices, pretty bleak picture really across most commodities except for precious metals and copper holding on a little bit, but we did see it rebound on Friday due to that non-farms number, which did encourage investors that the economy still is holding on, and with decent employment levels, there's still going to be that aggregate demand and supply in the economy to prop up and bolster some of the downside that we've seen in other areas such as spending and consumption. And then in equities, they performed quite strongly Friday. The Dow Jones up over 1.5%, the Nasdaq up over 2%. We saw European stocks fly away. We also see in some of the struggling Republic banks, we saw a massive short squeeze. Regional banks, sorry, we saw a massive short squeeze in some of those stocks, and they've actually bounced back quite strongly as a result of some of the increased market sentiment and risk sentiment we saw on Friday. A lot of those short positions were stopped out and added to that rise. So yeah, what was quite a bleak day across markets. I mean, quite a bleak week across markets. We did see quite a good recovery, and off the back of that number. So yeah, equities especially bounced back and finished the week off in a more bright picture. So yeah, that's about all. Big week for central banks. Big week for volatility. We see that jump back up, and yeah, the crescendo was the non-farm payroll. So look, I don't know if we're not any wiser than what we were coming into the week. It's hard to get a gauge of what's happening. We saw central banks come out and do all sorts of things, and then we've seen data that can sort of point in the opposite direction. So it is really unpredictable times, and it's really tricky to try and predict what's going to happen. But I think we've just got to take every data event and central bank meeting and announcement as it comes. Okay, thank you very much for tuning in, guys, and we'll speak at a later date.